Hi, this is Kim Watson of Easy Trader. Welcome to a review of the current week's key economic news events. So let's have a look. The big story is really last week. US data continued to show improvement, particularly the employment report on Friday, which saw quite a large sell-off in most currencies against the US dollar, effectively the US dollar gaining further strength. Now, aside of that, this week we've got the New Zealand interest rates coming out and the Australian employment figures, and actually the Canadian employment figures right at the end of the week, all on their own, not fuzzed up by the horrible non-farms, which spoil trading. So some possible moves coming out this week. One thing to remind you, we're on daylight savings for US and Canadian time now, so they flicked across at the weekend. Okay, looking then at Monday 9th of March, Eurogroup meetings all day. I understand that there will be meetings with Greece again with the Eurogroup, within the Eurogroup. We only normally get data being released as each of the members speak to the press throughout the day, so there's no specific time for this. Can create decent volatility in the euro at times, but obviously it can go either way, so some care needs to be taken. Looking forward to Tuesday. We got the European economic finance meetings even all day, and once again same situation occurs there. Later in the morning we've got the Bank of England governor testifying at 10 o'clock, this time to the House of Lords, I believe, to select committee, so that again may create volatility, but as questions come through, but I'm not expecting massive moves from that because it's probably already been said. Looking forward to Wednesday. We've got ECB Draghi speaking at 8 o'clock. Apparently he's due to speak at the ECB and its Watchers conference organised by the Centre of Financial Studies. So it may be much more of the same, I'd imagine there, but whatever, Wednesday we could see some volatility in the morning around about 8 o'clock, or just after, so who knows. Moving on through Wednesday morning, then we've got the manufacturing production figures. This gives me an estimate of around about 20 pip movements when this news is released. On any fluctuation it may run a little bit further, but the expectation theory, as I say, sits around about 20 on this. Later in the day, early evening, we got the New Zealand interest rates. Not expecting to be any changes there, but people will be looking for the press conference to see whether they continue suggesting that the New Zealand dollar is overvalued. And I mean, last time we saw about an 80 pip move throughout the actually I think it was on the interest rates itself, it moved 80 pip, so it can create some big volatility around that time. Thursday, Australian employment change 030, estimated expectancy theory around about 40 pips. This can fluctuate, move quite wildly in between expectation, but I mean it is a key number. Later in the day we've got the US core retail sales note, that's at 12:30 in UK time. Again, expectation theory around about 20 pip moves off this, but as we've seen with all the data coming out of the US now, it seems to have a little bit more bang for your buck in the sense of what is coming out, particularly if they hit in the right direction, and if the other currencies are looking weak, it really does sort of stick the knife in. So one that may help existing trades. Finally, Friday, as I said earlier, we've got the Canadian employment report coming out at 12:30. Estimate expectation theory around about 50 pips in terms of normal moves off this number. It rarely comes out on its own. It often comes out with non-farms, so it gets quite muddy in terms of what's effectively a move on a Canadian, a positive Canadian, and what's positive US. So hopefully we'll see a reasonable potential trade down Friday. Okay, that's it for me. Hope you have a great week. Bye for now.